right, looks like there was some Twitter issues. Looks like X lost a bunch of account access, so I got to reconnect those really fast as well. We know how it goes. All right, I'm just gonna have to ignore that for now. Unfortunately, we're not gonna be live on X. That's weird. That's really weird. I wonder if that's related to the same outages. Yeah, Porter. So it's a rough morning for tech. Yeah, the Weeble login works. Hopefully that API doesn't go down. That'll be, whew. I'll do stuff. All right, so same process as always, right? We're going to clear out the previous day's watch list for these scalps. We're going to go ahead and do our little pre-market shopping list, and then we're going to plot our zones, and we're just going to go from there. So let me just check something really fast while we're getting ready for that. Okay. All right. So before I do that, just kind of want to update everybody here. We'll get the spreadsheet pulled up. We'll get everyone's kind of eyeballs on the plan for the day. So far, we're working out pretty easily here. We've got 16 green days, 2 of which were red, one of which had some pretty considerable drawdown for this account size, but it was accepted in the moment and it's all good. And we made it back the very next trading day and then some, so I'm still on track. And we made sure that that ensured that that loss didn't bring us down to net negative for the week. So easy peasy. Just continuing the path, and then this is the overall plan. We're going to go from a couple hundred here, 500, 600, 700,000, blah, 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 3-4 figures, 3, 4,000, 6,000, 10,000, 15, 18, 24,000, so on and so forth, all the way up to probably about 300K before we start having to really adjust the strategy. So it's going to take some time, but that's the plan. So today, my goal is simply to make $4.21, and I've got $280.36 to do that with. So I think I'm going to be in decent enough shape. No, Discord doesn't use Cloudflare, thankfully. That would be that'd be a little chaotic. No thanks. Don't put that evil on me, Bobby. Just kind of looking around pre-market. Obviously, we like a certain number of things, criteria to be met here. First off is going to be volume to market cap ratio. This is something I teach every single week. So I want the volume to be greater than the market cap by at least a 1-to-1 ratio. And if that is the case and the market cap is small, that also can't just be the result of the stock being like 3 cents per share, right? Because the market cap is a result of free float times market price or share price. So if the share price is 3 cents, that's naturally going to be super low for market cap. So I have to be mindful of that because I want to make sure it's relative volume per share, basically, or per share within the float pool, I guess, to be more accurate. So I just got to look around and make sure that things make sense that I'm trading. So obviously OLMA is up the biggest percentage. So I'm going to add that to the watch list just for funsy onesies, but it doesn't quite have the volume that I'm looking for. I get a couple surges here pre-market, and then we get a couple earlier this morning. So the volume may surge back in, and that's all fine and dandy if it does. But I think this one here, CAN F, we've looked at this one quite a bit in the past. So it needs to be directional volume now. This is just kind of chop. I don't really like that. CMND, I freaking love this one. Made so many trades on this one. Definitely going to add that one to the watch list. ARVN has a very low volume to market cap ratio, so there's no point in me trading that at the moment. The volume may surge in later as well, and that's all fine and dandy. But for right now, we're looking pretty low, pretty sparse in the percentage moves department. So we're getting some, pretty well below average volume. Hey, what's going on? What's going on, alarm clock? How you doing, buddy? So I'm also going to add ASBP. Now the volume is currently going down, so I'm not a fan of that. So I probably won't be trading this one, and it's super far down on the list, but it does have a good volume to market cap ratio. So I'm going to add it to my list anyway. Lobo has a good volume to market cap ratio, but it's a result of this one pop right here. That's 5.42 out of the 7.39 million. So without that, we'd be about 500,000, 2 million, so about half the market cap. So not a big fan of that. Plus the share price is 45 cents. And with ASBP also, the market cap's only 9.81 million, but that's because the shares are 10 to 11 cents. So worth keeping an eye on, but not worth chasing and jumping into just yet. So I think that's probably all I'm going to have for this list today. I don't really see too much else on here that I like. So now I want to go through each of these and just kind of see what's going on. Obviously, CMND is going to be the favorite in my opinion. Anyway, I like this one a lot better. So let me just plot out this level immediately, and then we'll just kind of we'll peek back up here. We'll go to OLMA. All right, so let's plot out some levels that make sense. I see this guy right here. And that's kind of it until we get down to here, maybe. We got kind of one right here. And for those that are curious, what I'm doing is instead of drawing like the fair value gap itself or the impulse itself, I'm drawing the candle where it started. And that's something that you don't see a lot of out there on the internet because people mostly just focus on the fair value gaps and they don't really understand them. And that leads a lot of traders into believing that they can use them for prediction. And that's not the case. That's how you hurt yourself. That's a transitory zone. This one here is nice. I like this one. It's still kind of transitory, so I'm just going to leave that orange. This one is beautiful. That's going to be a yellow one, and this will be a yellow one. All right, so with that said, we've kind of got some zones here. I don't know if I like it right here. Yeah, I kind of do. Sorry. So I got 140.18. And for this one, it's pre-market, so I am taking a bit of a risk here. So I'm just going to set my sell order up immediately. I'm going to sell 80% of my shares, and we're going to do that pretty close to the price. We're seeing a heartbeat here with a high stall. That's the reason I jumped into this one. So we're getting more of a heartbeat now, obviously. So just looking for the volume to push a little bit. I'm just going to sell, 80% of the shares at a nice achievable target. Somewhere above 1.5%. That's kind of my strategy on this. Also, I want to change this to open. There we go. So my average price is $27.70 per share. I don't like that because it's got to go $2.77 for a 1% move. Or I'm sorry, 27.7 cents, my bad. So 28 cents for a move. So 1.5% would be up to 28.12, which isn't super far away, but it's kind of a substantial move for a stock of this size. So it just means we got to look at the slower pace stuff on those. So let me just continue looking around. I'll let that cook for a little bit, and I may add some more to it if I want to, but I think I'm going to hold off for a little bit. We'll just see where it goes. We're about to enter auction cross here in a minute and a half as well. So with that said, let me just peek at these really quick, then I'll catch up on the chat. Sorry about that. All right, so I think the only other one that's going to get some juice out of me today is probably going to be CMND, but we'll have to. I'm not going to touch anything else pre-market. I want to see what's going on during market hours. So it'll be a lot more stable. Maverick, welcome. Is it fine to ask about some small elementary info if I'm new to the field in the live session? No, absolutely. That's your best chance. Ask away, man. I love questions. How long have you been in the market? I will harass people until they ask me questions. 10 years been in Forex. Okay, that's good stuff. I haven't touched the pairs in a long time myself, but the same concepts that I teach apply to all markets. That's kind of why I teach them. My number one rule is risk management. So if you manage your risk well, you should do well. And if you understand the tools, the platforms, and the market, the mechanisms of the market, and you're willing to relearn them, because a lot of stuff I learned the wrong way. And I just didn't know about it. Yeah, Charlie. If you're driving, you're not going to want to trade these. But yeah, let me put those in the chat for you. ASBP. All right, there you go. So the first three, I like. The last one is just kind of on there because it's kind of a crummy volume profile, but I do likes it. Yeah, and and really it all just boils down to finding out what you like and what most closely aligns with your skill set and your psychology. So if you're someone that's doesn't have a high risk tolerance and maybe you can't react or respond as quickly, and you tend to just get impulsive and frustrated easily, just fast moving crap is not going to be your path to success. It's going to be slower swing trades, maybe some passive options that are more logic oriented and capped risk. Ideally you're going to be mixing in kind of everything over time, but the main priority here is to make sure that the market doesn't become a lifestyle, right? You shouldn't be looking at charts for hours. You shouldn't be crawling around the internet looking for, tickers to trade and things like that. You shouldn't be strategy hopping. In reality, the market should be a few minutes a day, if that. Even if you're swing trading, it should just be, I'm going to pull up a couple of filings. I'm going to skim through them really quick. I'm going to just update what's on my watch list already. Or maybe today's the day I run a scanner, right? Or a screener, sorry. I'm just going to pull up a couple of tickers that I kind of like at a glance. I'm going to just see if they pass the sniff test. If they do, they go on a watch list. If they don't, that's okay. Then I'm going to spend a few minutes researching them, and then maybe I place a buy, maybe I don't. Maybe I just set an alert for when it's time to buy at a level that I like. And that level should be very simple. It should be based on a very simple technical analysis strategy, whether it's moving averages, whether it's stochastics, whether it's a structure candle pattern situation. It should be simple. It should be minimal. The market shouldn't occupy a huge role in your life. It should just be, here's my little side hustle. I pick it up, I take it out of the box for a couple minutes a day. I play with it. I put it back in the box after I get paid, and then I walk away. I just move on for my day, even if I take a small loss. I don't want to take huge losses and have this big emotional roller coaster every day. It's not worth it. You wouldn't do it in a relationship for very long, so you shouldn't do it in the market for very long, because it's got devastating financial consequences if you do it wrong. And then, we're also humans, so you can't blame yourself for, what the market does, right? You have to understand that it is a machine of uncertainty, and we're really bad at interfacing with it by default. So the sooner you recognize that, the better you'll do in the market. So for OLMA, we're knocked across now. We got about 2 minutes till market open. I'm just kind of watching this press up. It does have a good strong volume profile. It's just kind of hanging out here while we're waiting for volume to come back in. So as always, I'm just kind of waiting for my quick little pop on this one. Let me just squeeze back over here. I'm just going to shop around a little bit. Now CMND is also kind of setting up a little bit, but it's not quite ready yet. It needs volume. We'll probably get that at market open. All right, so I'm going to sell about 80% of my shares on OLMA right here if I can. There we go. I got filled. So now I've only got 20% of the shares left. It can't hurt me anymore. So I'm immediately going to set up my next sell order for 100% of my shares that remain, because it is a pre-market stock and I can't use a stop loss. And we'll see where it goes. So now, I'm up 1.06% already for the day. I've realized a total profit already at 359. And remember, my goal for the day was just to get $4.21. So not too far out of reach, and if I don't get the day's, realized profit for, the whole day, that's okay too. I'm just letting things kind of work out the way they want to work out. And I can always add to this position if I want to. I kind of wish there was a way to edit this setting more easily. I guess I can use these, right? Yeah, I guess I'll just do that instead. I'll probably just use this, my turbo trader here. Not a huge fan, but that's okay. I'll just use the buttons. That's okay. Ordinarily what I would like to do, like for the first buy, I can just set this to like 50% and that's fine. But for this, I can't edit this, above $100, it just goes to $200. I can't edit it to like 130 or 140, so it's kind of dumb, but that's okay. It is what it is. All right, market is open, which means I'm going to have to shuffle some stuff around really quick on my broker. One day. All right, so I got my top gainers list up here. This is ready. I'm going to delete this order here, and I might actually add some more to this one if I like it. Now I would, again, I'm just going to have to uncheck that. I'll just do it manually. Looking for a specific break over 27.17. So I think I might just trade this one twice if it gives me what I want. The other one would be CMND. So let me see what that's going to give me. Oh, I really like that one better. Decisions. Yeah, I don't want to run that into a halt though. Yeah, I think I'm going to grab some here. This is obviously high risk, so be careful. I'm going to be looking to sell most of this at a pretty close target. Right there. I'm going to sell it around 2% if I can get filled. Got partially filled. Just going to go ahead and cancel that for the rest. I think we got some more juice in the tank there. I might have to cut the OLMA. That one's pulling down pretty hard. Yeah, it's out of my box. I think I'm just going to take the loss on the remaining 20% there. I don't want to play around with that too much. Now, obviously, CMND, we're seeing a little bit of volatility. I got 246 shares left, and we're kind of back to break even for the day. So it's kind of one of those sketchy mornings. I don't want to have a huge drawdown day. I do like the setup. I do like the volume profile on it. We've traded this one a lot, but I don't want it to hang out too far down. Let me catch up on the chat here while I'm waiting for that. Does TradingView show us delayed data if I'm not using any purchase plan on it? Yes, that is the case. Do I have to buy the level 1, level 2 data if my system is all about trading lower time frames with fast execution? And maybe a small explanation to how it can affect the order execution if so. So what you're referring to is the exchange data. So there's a couple different streams of that data which you have to pay for. If your broker doesn't offer it for free, which most don't, especially if you don't have a subscription with them. And what that does is it allows you to see the up-to-date price action, meaning the time in sales, which is right here. This is just a stream of orders as they're filled. Taking a little bit of drawdown here, and that's okay. This basically just every time a real order gets matched by the exchange and filled, it gets reported through the time in sales, and you see it pop up on the data stream that you pay for, right? It shows you the price, the order size, and the exchange that it was reported through, and the time. And then the order book is separate. That's the level 2. Level 1 is just the top bid and ask. You're only going to see the one price. So if I change that, that's what you'll see on level 1. Level 2 is where you see depth. It's a depth of market. And that's where you see all these. The order book is basically just a set of pending orders. So rather than seeing all the orders as they're filled, you're seeing pending orders. So if like I put my sell order up here, for example, at 40.80, down here on the ask side, around 40.80, you'd see an order pop up if I was big enough. On this account, I'm not. And then you'd see some order size at 40.80. So what you're seeing here is all just pending orders. They're not filled yet, which means these are all limit orders or some variation of like buy stops, right? If it's on the ask side, it has to be a limit sell or a buy stop order or a conditional bracket or something like that. Now, on the bid side, it's always like a limit buy order or a stop loss, right? And those are just pending orders. As they're met, and then this is kind of a fundamental misunderstanding most people have of volume. It's when volume moves up and down, it's not an imbalance of buyers or sellers. It is, it's not that some bigger group steps in and buys more than is being sold and so on and so forth. That's what you hear on YouTube, and it's all BS. So what's really happening, and if you break it down logically, every buy has to have a seller, right? And vice versa. Every time you sell a share, it has to be bought by someone. It doesn't just go back into this magical pool where someone is paying money, right? That's not how it works. So when you have price move, what's actually happening is there's a dominant order on one side and a passive order on the other side, so a resting order. And when the dominant order, let's say it's on the ask, which is the higher price, when it's a dominant order, it reaches across the bid. Well, it gets matched, but the exchange reaches across the bid and finds one that's equal and opposite on the bid side, and it matches it, and then it pulls it up to the ask. It pulls it up closer to the ask. And if there's enough pressure or enough spread between the bid and the ask, the price will move up. If the dominant order is on the bid and it reaches across and grabs an order from the ask and matches it and pulls it down, the price will move down. So that's really what you're seeing. It's not buyers, outnumbering sellers. It's the exact same. It's always equal and opposite. Well, I can't say always, because there's a brief window of time every morning called the auction cross window. It's 5 minutes before the market opens. There is an imbalance there, but it's very short term, and it's not an overall imbalance. It's just a surge of executions. So, and that just affects the spread, really. It's not, again, it's not as disproportionate as people believe. So that's where a lot of people tend to mess themselves up. Oh, that one halted to the downside. Whew. That's why we stop out of that. So I am taking quite a bit of drawdown here on CMND. It's not a full position, so I'm not too worried about it. I still like this stock, and I still like we get a zone recovery algo set up on this one. I'm personally okay with this drawdown. If you're not, again, A, I don't want anyone to copy me ever. And B, if you don't have the risk tolerance, you don't have to tolerate big losses. So if anything goes down more than like 2.5% or something like that, and you're not comfortable with it, you can always just cut it, right? You don't have to hold stuff down like I do. So again, please just be careful. And if being down here is going to cause you stress, then it's probably best just to cut stuff early and then just not deal with the drawdown. All right. So hopefully that makes sense, though, in terms of the volume, the understanding of how volume works and how price moves. Because when you see a setup like this is a structured zone recovery setup. There's multiple algos on here that are trading a very specific strategy, which relies on chain fills out of certain zones by repeatedly matching aggressive ask orders or aggressive bid orders in sequence to carry them up the price chain very aggressively. So when it breaks out, you see bam, 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 and then the price just rolls up or price runs down. And that's where you see bigger volatility. Okay, Charlie, that's good. I'm glad you're not driving. All safe and sound. Yeah, CMND is beautiful. I think I took an aggressive entry here because I was looking for that breakout, and it just kind of pulled back, and I still like it though. It's okay. Yeah, 5-minute higher time frames is going to look pretty decent. Let's pop that up just so you guys can kind of see it. So yeah, we're kind of looking for a pullback to this box right here. So that's why I'm not worried about it. But yeah, I do like it. I just got in a little early on that one, and that's okay. Maverick says, this is what my TradingView shows me right now. Isn't this the same price level, or it's delayed? I think they're both the same, or I'm wrong. I mean, if it's moving as quickly as mine is, it's not delayed. But if you're seeing it stall, or if you're seeing gaps in the price action, you're looking at the 1-minute chart, and this is what my 1-minute looks like. So it looks like it's relatively similar. I don't see too many gaps or dashes, except for maybe in this area here. I see yours looks a little bit different. Well, not really. Yeah, I mean, it's kind of similar. You got your smaller, fat body doji here. You got your gravestone. Then you've got your hammer and inverted hammer here. Yeah, I would say yours kind of looks okay. Now, again, you're going to have to see if it's moving. I can't see that in real time, unfortunately, with your screenshots. So if you see the price actively moving like mine is, then yeah, you got pretty up-to-date data, which means you might have gotten like a complimentary data subscription. I'm not sure. Or maybe your broker provides it. If you've connected a broker to TradingView, sometimes that can show. You can always just reach out to the TradingView support team. They're pretty good about getting back to you. 10 to 27 cents then up. Yeah, I could see that. Maybe not even that low. I mean, I could see it just hitting this box, but we'll see. I mean, we don't ever really know what's going to happen there, but there's definitely a nice little takeoff zone right here, right? And it's produced for us in the past. So we got that big move, we got that move, we got that move, we got that little guy right there. I really like that zone, but we'll see where it goes. We're kind of in the magic box right now, the first of two. So let me make that one there, and then I'll make this one yellow. And again, it is, we're hitting some drawdown here, so I don't want anyone to feel like they have to continue holding if they're not comfortable. I am. So there should be a clear difference there. So yeah, we're just kind of hanging out. As far as OLMA, this is why we stop out when it's unhealthy to continue holding. When we don't like the setup, we don't like the chart. Sorry, the volume profile. This has a much bigger gap to downside, so I don't want to hold that one, and that's why I just stopped out immediately. Plus, already guaranteeing a net profit on that position there kind of helps to keep us out of that stickiness. I would have liked to have locked some more on CMND up here, but it took I couldn't quite get filled. I got 100 out of my 346 shares filled. So we'll see. Not subscribed to anything. Oh, you're TradingView? Yeah. Yeah, I mean, it might just be like a seasonal thing too. Sometimes they like to juice people up before Black Friday. You know, they do a yearly sale where everything is dirt cheap on there, but we'll have to see. Charlie's is not holding yet, was parking safely, waiting to pick up. I heart CMND, makes me feel like I know what I'm doing. There you go. Like I said, you know, I only see two zones of potential value here. I could very easily see this punching a new high. This thing can absolutely fly when it wants to. There's there's very few restricted shares. There's 140,000 restricted shares. 9.5 million free float. You know, this thing can absolutely blast. We've seen it a lot historically. You know, it does like to sell off long term, so we don't want to hold this for days, but these pops can get pretty nice. And there's a lot of them, you know, so we're looking for short-term parabolic move and then just getting the hell out. So that's all I care about on this one. So while that's cooking, we'll see if it holds a support zone. If it doesn't, we'll probably come down to here and then see a move potentially, but we'll see what it does. OLMA continues to try to find support. We're kind of in no man's land now. So, you know, it might bounce out of this zone here, but that's kind of sketchy, you know. I'll draw it anyway, just so we can see. But let me drop from the bottom there, this guy. You know, but again, that's a super shaky zone. I don't like that at all. KNF is slowly trickling to the upside. A lot of wicks. This is not the best time frame for this one. And then, of course, AVSP is just selling off. So that's why we don't want to jump into that one. So, yeah, I'm just kind of hanging out, watching CMND. We'll see if it wants to pop back up and give us our new high. And maybe we can get our refills again. Let me draw that. I'd like to see a nice, beautiful breakout on that one, but we'll see what we get. Hey, Top, what's going on? Good morning, good morning. You're looking at KNF above 60 cents or 62 cents? Yeah, it's got to get over these highs, you know. It's got to clear highs and push up into this wick territory. It's just kind of messy right now. CGTL. Yeah, that one's creeping up the list there. It's still got a pretty low volume, but that's what you like, though. You like them right as the volume starts to come in. The ones that are really starting to take off. That's good stuff. You got a good screener for it. That's a good one. Nice low float on that one, too. This one does have a lot of restricted shares, and they are back over $1. Let's see. Do they have, you know, we've traded this one obviously in the past. Do they have a, what's 180 days? Yeah, let me, I mean, that's pretty short term. I don't think they'd have a delist notice. Let's check. CGTL. Do they have, wow, they have like no news. They just IPO? Horrible if so. I'm so not used to using this on the, there we go. CGTL. All right, sorry about that. All right, so just gonna look at their, I'm gonna look to see if they have a notice of delist. Notice of effectiveness, what's this? This is a registration, okay. So basically I'm looking for two things. I'm looking to make sure that they don't have a delist notice by the exchange, and that they're not going to just drop an offering, because that looks like they like to dilute a little bit. Another notice of effectiveness, correspondence. There we go. I'm going to look at those because that's those are letters between the exchange and the company. So I'm just going to kind of look at those really quick. I can skip that one. It's amended. Okay, that's fine. That's their registration stuff. Not a big issue. Rule 461 again. That's registration under an F1. Okay. Companies responded to all the staff's comment. Okay, so nothing there. Yeah, so they like to manipulate their pool, right? So we don't like that. So, you know, just be careful is all. And it's a Chinese company. We got to be very careful about their dilution. surprise regulations and things like that. So just be very careful with these. If this halts, for example, and they decide to just delist randomly, which they can and have, then you'd lose your whole investment unless you can sell it OTC. So anytime there's something that's kind of creeping above $1, it's a good idea if it's a low float with a lot of restricted shares, like or outstanding shares. The difference between the outstanding shares and the free float is the restricted shares. That's the number of shares they could dump into the market at any time. And these guys are very, very frequent with their registration statements. So, any of these pages, you see multiple, like there's 7 on this just view, and they keep filing F1As. So, sketchy, right? So just be careful. That's all. It's a foreign company. Obviously, you're seeing 6Ks instead of an 8K. I don't see, there's a 20F right there. That's their annual earnings. But a lot of F1As. So I'm not a big fan of that. So really good to just get in and out, but we got to be careful with stuff like that. It was OLMA is kind of pulling back down again. So this one's kind of in that sketchy zone. I think the better fruit's going to come from down here, around 19 bucks, somewhere around there. We'll see if we get that. And then CMNV is also pulling down. We've broken out of this zone here. If we can clear these wicks, we should come down to the yellow box, and then we can probably trade yellow to yellow. We'll see. I might end up just holding this one a little bit longer throughout the day because I can't stream all day. But I'm here until then. So we'll see where it goes. And again, it might look like a huge bloody day and all that good stuff, but through position management, I've reduced this loss down to less than a third overall. So I'm okay with it. I don't mind the drawdown. Yes, CGTL here. So for this one, you kind of get a zone right here. We'll see if that one wants to get respected or if it wants to pull back down and hit. You also have a zone recovery algo set up on this one. You can see these symmetrical walls here. You got a few staggers, which is all right. But right now, this one's going to be pulling the price down to probably 102-ish. So we'll see if that magnets the price down and pulls through, or if it's going to hold at 102, which I don't personally see that happening, but we'll have to wait and see. There's no point in trying to predict this. It's just Chinese stock volume. So, let's take a look at your Maverick. Based on your experience, can you tell when it's dangerous to buy a lot of shares to fill your risk percentage? For example, a stock that costs a low amount of money, and to get your 2% risk, would you need to buy 10K shares or even more? Those 10K shares are a lot and can't be filled properly. So when to say, yeah, that's not good stock because it can have a problem with order filling on same buying and selling prices you want. I'm assuming you're asking about liquidity ceilings. And that is just when you try to fill a large order, you can't place all your money in one spot, because the more you buy or the more participation there is at any price point, the more likely the price is to move away from that price point. So you're going to miss out on some of those fills, or you get filled later. So if, for example, this stock was moving to the upside, it's a $1 stock with 8 million free float. If you put like a 600K order here to buy $600,000 worth of shares, you're going to get filled some here, some here, some here, some here, all the way up. And then eventually other people will start selling, and then you're stuck because you're still getting filled. And then you cancel your buy orders, and then you start to sell, and you sell a little bit here, a little bit here, a little bit here, here. And then you're selling all the way down, but other people are selling ahead of you, which means that you're their exit liquidity, which means that you lose money. So yes, there's a very specific system to approaching that. And a good rule of thumb is to never place more than 0.25% of the free float in any buy or sell. And then that way you make sure that you don't get yourself hurt. So in order to calculate that, we take the free float, which in this case is 8.73 million, right? And then we multiply that by 2.5%, or we can say, plus 2.5% to get the number. So 218,250. And then we multiply that by the share price, so 1.047. So that tells me the largest order size that I could theoretically place. Now, this is a low float stock, so you don't want to place a $250,000 because you'll just never get filled. the maximum should only ever be 228.5K on this stock at this price point, right? I shouldn't have more than 218,250 shares. So it might seem like a lot, and it is for this stock. And again, when you get down below like $2, there's a little bit more of a layer that you have to add to it. But you're never going to see an order this size, a 200K order, come through the time and sales, because that's the maximum. And these guys, these algos won't go anywhere near that number, right? So a pretty good rule of thumb, if you're ever curious, is when the price is moving, just look and see what the big numbers are. You know, there's a 53.50 here. You know, I don't really see too much else. 27.77. There's a 10.35, 11.95, 1,500, 5,000. You know, so I wouldn't go above 5K on this one. You know, personally, per buy and sell, because it doesn't really matter. Even so much what you've seen here, it matters what's still sitting on the book. You know, so that order, in theory, should be placed at a bigger wall, right? And that's another element to this stuff. You know, when you get into the bigger dollar amounts, the bigger order sizes, you have to trade the liquidity the same way the hedgies do. And you kind of have to use more of an accumulation strategy, which is good for us because we know how they do it. So we can just copy them. But you're really going to want to trade other people's liquidity at that point. You know, so you're going to want to do like stop loss raids and things like that. And, you know, that's why the market works the way it does, is because these hedgies can't place their big orders, you know, in one spot. Like a hedgie can't go to their boss and say, I made $400 today, be proud of me, because that will underperform. You know, they're going to get fired if they do that every day, because they have expectations, you know, and they have resources. So what they have to do, rather than placing, you know, $250,000 at this spot right here, and then making, you know, maybe they get filled, maybe that inefficient rally of price that they cause in the next liquidity, maybe they make a net profit. You know, rather than doing all that, they're going to put their orders down here and in this box. And then every time the price comes down here, they're grabbing a little piece of it, just a little piece. And then when it starts to rally, you know, let's say that they want to absorb as much as they can above this zone, and that's kind of zone recovery. When it rallies, they place their bigger buy order here, because that's where the bulk of the participation will step in, and they're just basically going to buy other people's take profits, and they're going to sell at a very low profit range, directly above that, just to churn that volume. They're going to trade the turnover, not so much the price movement. So they're going to kind of buy and then absorb at the same time, and that's all they do. Like they sell most of their stuff very tightly. And then they let the other hedgies, the other retail traders, and you know, we don't really matter that much, but they let the other market mechanics move the price for them on smaller amounts of shares after they accumulate, and sell most of them right above where they bought. So, because again, they're trading in volume. They got so much more in the mix there. And that's where you get things like short squeezes, for example. That's another example of this concept in effect. And it's not caused by retail traders. I don't want anyone to believe the BS that's out there on YouTube. Retail traders don't cause short squeezes. We don't have enough resources. We don't have enough influence to do that. Nor can we cause a gamma squeeze. We are just along for the ride, and it's mostly institutions. You know, you're talking world banks and, you know, other like established firms and things like that, not us. So when there is a short squeeze opportunity, we can still identify it and we can participate, but there's a belief that it's the people around us that are just like us that are causing that, and that's not the case. The hedgies are already aware of all these. They have them on a watch list. They just gauge sentiment and they start to look for volume from their peers, which is not us, right? When they see that volume start to come in, they will start to participate, and it's a cascading effect. And that's when we see all the names pop up on social media and be like, oh my God, short squeeze on GameStop. It's not us. So I don't want anyone to be misled there. That's probably going to halt their top. Trading Lobo. That's a beautiful pop, sir. Let's draw a line there for that wick. Good stuff, sir. I like it. So it's 2.5% of the free float shares as a max, or using level 2 data to see what orders are available now to fulfill my order. 0.25%, 1/4 of 1%. That's the rule. Yeah, 2.5% is huge. And if you buy 5% or more of a company's float at any given time in total, meaning that you ever own 5% or more, you have to file a form for that. You have to file a 13G or a 13D because that's a beneficial ownership of shares that influences votes and things like that. So if you have that kind of money, go for it. But you're not going to be doing that on low float garbage. I guarantee it, because I don't. Right. So it's just not worth it. Yeah. And that's why you'll see a lot of times they'll capitulate at like 4.9% because they don't want that 5%. They don't want to be on paper. There's a pop over new high there, over that pre-market high top. Good stuff, man. Beautiful. I like it. And if they're insider, like let's say it's the CEO, right, or the CFO or something like that, or someone with material information, right? It doesn't even have to be a board member. Then they file a Form 4 because that also influences shareholder votes and things like that. So there's a method to the madness with those SEC filings. But the good news is they're transparent enough that we can see them. The downside is that once you acquire that 5% or more, you have 4 days to file it. So by the time shareholders see it, the damage is already kind of done, So especially if it results in a massive spike in volume, which is why these hedges space it out over time. So if you ever see like a lot of orders or a lot of uniform size orders come in on a less active stock during lunchtime, for example, when it's typically the slowest time of day, that's usually an institution trying to size in under the radar. They'll see a stock that they like, it's underappreciated by the market. They'll do their research. They'll just kind of get into position nice and discreetly over the course of several days or a couple of weeks. And then they'll just do that day after day after day. It's algorithmic. It's not a human pushing these buttons. It's just an algo that's going down a list and buying stuff. And then over time, those are the stocks that tend to have these massive rallies. But it's not all the time though. And you can't don't use that as a metric. I'm just saying if you happen to have one on your watch list and you start seeing that and you're swing trading it, that's usually a pretty good indication that something may be happening soon. And that, again, it's not a guarantee, but you also got to make sure it's not like before earnings or something, because sometimes they do that just to trade both ways. These guys can get out fast. We can't. So we have very low priority on the match chain. So you got to be very careful with that stuff. OLMA is down to the more stable box. Let's see if we get a reaction off of that one. So for that, just looking for a move from there to there, and then from there to there. We also have potential for that to that, and potential for that to that, right? We just trade box to box. And, if it fails the box, there's just no trade, unless you want to wait till it comes all the way down here, which is the much stronger level. Plus, you got a nice wide range there. So I do like that a lot better. But you got to be very careful with this stuff because you don't want that kind of drawdown. I'm taking pretty substantial drawdown myself on this one. So, and I'm telling you, I don't want that kind of drawdown down there. That's like 50% down. Let me catch up on the chat here. Exactly, J-Wag. Dagno should have been playing these SPY puts. Yeah, his SPY stuff's been spot on. Him and Austin both absolutely been crushing it. Maverick says that scanner you're using right now, does it get the highest change from open percentage only, or are there also other things like low float? So this is customizable. It's just the Weeble's top gainers list. So if you click here, you can kind of choose what metrics you want to have on there. I just like volume, market cap, percent change, last price, and free float personally, just so I can use that to build my little shopping list. And that's it. That's all I use it for. I don't really care too much. Oh, there you go. There's your Lobo. Boom, boom, pushing higher. Look at that. Beautiful trade, sir. Top is just slamming profits today. I love it. Delicious. That volume is starting to fall off, though. I'd be a little bit cautious up here. On the lower time frame, it's pushing up, but as soon as that volume deflates, that's you get a lot of downside there. You already sold 75% of it. Nice. I love it. Keep it going, sir. Yeah, there is if you go up to the daily time frame on this one, we've looked at this one a lot. We've traded it a couple of times. This one likes those big pops. It's just like CMND. The only thing that really worries me is the number of restricted shares. You got almost 6 million, which is almost double the float. And restricted shares, this one likes to pop. It likes to rally really high, really fast. It doesn't hold those profits, obviously, but it does like to rally early and then sell off much more dramatically. So, just be careful. And you're coming into it with a pretty heavy downtrend there, but we're getting off this level here. So I like it. Just got to keep those stops nice and tight. That's all. You can trade these in and out as much as you want. Beautiful setup. All right, OLMA is starting to see a little bit of support here, right? And again, it did that over here as well, and then it sold off. So that's why we always want to wait for a confirmation. Now, I got in early on CMND, and we're kind of down finding support as well, but I'd like to see it come down here to this, this yellow box if we want to, but I get in way up here and then I sold, I only got a partial fill up here. So seeing some drawdown, and that's okay. But I realized a P&L so far of 219. So looks like I took a little bit of a loss on the, what was the other one? What did we trade earlier? It was, it was OLMA, right? That's right. That's right. I forgot we sold it. A little bit of the sell-off here. So we gave some of those profits back here. So we'll see what that gives us. But that's why, sometimes, if you can justify it, if there's good structure, good strong volume profile, familiarity with the stock, then sometimes it's okay to hold. But in a stock like this that I just don't like, and I can't justify holding it, and we just see that kind of strength coming down, it's just not worth holding. We can always just get back in later or just step away for the day, if that's the case. Oh, Cloudflare is back up. Good stuff. Yeah, Cloudflare is like a miniature version of AWS. If that goes down, a lot of other sites and services kind of depend on that. And that influences a lot of the stuff we see on the internet, like like our own website and our own blog. They're anything hosted with like A2 hosting, for example, or Twitter API. It seems like it was done. So I wonder if they use Cloudflare. A lot of sites through GitHub, a lot of repositories that are deployed through GitHub tend to also align with Cloudflare. Not always, but for smaller companies, that's just a faster, easier deploy pathway. Killed your Go miner. Is that for crypto? It took me a minute to figure out how to pronounce that. What's a commoner? It's an NFT that mines crypto. Okay. That makes sense. I mean, don't say it too loud. Duck will come running. Maverick, what do you think of trading pre-market? Is it good for big squeeze stocks that move, and maybe we can trade the small pullbacks for continuation on low time frames, or the spread will be so bad that things will not be so smooth while order filling? So there's some pros and cons for pre-market trading, and they're mostly cons. So it's very risky. And the reason for that primarily is because your stop losses don't work. Things have a little bit less inhibition pre-market, and you can't get out of it if you need to in a short amount of time. So you're relegated to just limit orders. which, fill at or better. So if something's selling off aggressively, you would either have to try to continually move your level down if you wanted, or you can try to jump out ahead of it and just accept a bigger loss ahead of time. So it's always riskier to trade pre-market, in my opinion. Plus, you can't use those stop losses to follow the price up. You have to sell as things are moving with limit orders and then try to catch the price up and down. So if something's moving super fast, especially on the low time frames, you're going to have a more stressful experience. And as you mentioned, it's also lower volume, which means the bid-ask spread is going to be wider as well. So very risky stuff. We typically like to trade only during during market hours. And again, all drawdown is a choice. So like if you're down like I am, I've got some pretty serious drawdown here on CMND. It's acceptable for me. I have a high risk tolerance, but if it's a newer trader or someone that really can't afford to take that kind of hit, like if they can't build it back, like I can easily build these back. If I do have to take it on the chin and just take the hit, if that's the case and you're just trying to build an account and you're tired of being, bleeding out and stuff, then you wouldn't want to trade pre-market because you'd probably get chopped up pretty hard. So it's easier during the market hours to just set up a bracket, and just say, okay, I want to set a stop loss and a take profit bracket. I can just press a hotkey and it'll buy some number of shares based on position size or portfolio size. It'll set my exit conditions in both directions and I don't have to think about it, right? It's going to be a lot less stressful to do it that way. Even if you take a higher frequency of loss, you'll have smaller losses and they're more easily digested. But if you're new and just trying to figure this stuff out, that's the best way to protect yourself, in my opinion, is just with bracket orders. And then you say, but is it the same case of poor liquidity, even if the stock has high relative volume and making big changes percentages? Sorry if I didn't explain this fully in the first question. Yeah, I mean, if the price has low volume, the bid-ask spread will widen. And that is the responsibility of the market maker to ensure that there is enough liquidity. Right. So they don't have to buy everything and sell everything, but they have to participate enough and establish liquidity by placing these walls on the bid and ask to ensure that the spread can stay relatively tight to an extent. Right. Sometimes the spreads can get very wide and they don't have to do as much as they do. So a lot of times they prefer to offer liquidity. A lot of brokers will also offer some advantages for people that place limit orders over market orders because they want that liquidity there. Pending in the order book. So, in that case, if something has a wide spread and it gets a sudden surge of volume, yeah, you can get an absolute blast in price and it's less likely to halt pre-market, but they halts still do exist pre-market. I don't want anyone to believe that they don't. They're just less common, but they do exist. And I've seen YouTubers out there, they're like, oh, stocks can't halt pre-market, time to squeeze. And then something halts and people get in trouble. So just don't do that to yourself. And also that's when it gets really chaotic, because then if it unhalts and it's to the downside, then your stop loss doesn't work either, and then you get chain halted, and then market opens and then you get chain halted even more. So just be careful. It is pretty rare, but it does happen and it can happen. But yeah, I mean, if the stock is moving really quickly, then yeah, you still have the same risk. You still can't get out of the position effectively if your limit orders can't get filled and you're chasing the price up or down. It's the same magnitude. It just depends on which direction it's going. And that direction kind of dictates how you feel about it for a lot of people, until you figure out that your job is the same in both directions. It's just to exit. And then that's where people get emotional, and that's where they start, well, maybe 20% profit isn't quite good enough. I feel like there's more, right? And then they move their target up, and then, and then the price is selling down 13% and they're panicking and beating themselves up because they knew better and all that hindsight stuff. So in order to avoid that, we like to use predefined targets at a fixed ratio, mechanical position sizing, and, only trading in areas of high potential with low risk. And then part of that low risk means that you're able to actually execute. So that means trading things with liquidity, right? Because you want to be able to get in and out efficiently. And then also making sure that we're trading things that make sense. So if something typically has super low float, and it's a super low volume and it's just garbage on every other day, and then you get a huge surge in volume and then the volume goes away, but you're still trying to trade it and it's just dashing and dotting because you believe there's still a bunch of volume there, you're going to hurt yourself because that spread is going to widen. You're going to get filled wider than you want. You're going to take a bigger hit than you want, and then you're going to get frustrated and confused and chase the next strategy. And that's the cycle that people find themselves in. You're going to go straight back to YouTube and you're going to like, all right, this YouTuber sucks. Let me grab the next one. All right, I see this guy. And then you're going to look for confirmation bias. You're going to look at the comments, and they're going to be filled with a bunch of bot comments that says, oh, using this strategy, I was able to blah, 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 right? And then you're going to buy their course. And then you're going to try to replicate what they do. And it's all the same stuff out there. That's why I don't believe in copy trading. It doesn't work. There's no successful example of a service out there that actually does work. I don't care what anybody says. Until I see someone's overall P&L successful from a service like that, just like prop trading, I will adamantly reject that as a legitimate thing, because you can't copy someone one-to-one. You don't have the same portfolio size. You don't have the same circumstances and skill set. You are going to have latency because it still has to get from, they're going to prioritize pushing their button first. Then they're going to tell you about it, which means they have to articulate it, which means it has to be put into writing or a picture, and then it has to go through the internet. You have to see the image or text, perceive it, and then pull up that ticker, place your order at the same level, assuming the price hasn't moved. And then you have to execute exactly the same way they do. And by the time you get that information, there's so much latency there. It's just not going to be efficient, right? And with prop firms, these little pop-up prop firms, they make their money off of test fees. Very few people actually get approved, and it's insanely rare for a retail trader with no experience and no, even if you've been in the market for like a year or two, if you just don't know the market to the point where you're losing all your money, and then you're seeking out a prop firm so you have access to make more money with someone else's money, you're basically just taking out a loan effect. It's not really a loan, but you're just proving that you can't do it with your own money. So you have to go use someone else's money. Rather than doing that, learn how to do it on your own money and just build up your own money. And then you don't have to pay anyone else. That's the goal. And you can start with a very small amount of money and make profits. They compound. It's just a mindset difference at the end of the day. You have to be able to manage your risk, and you have to accept that good enough is good enough, and not take all these big crazy risks on naked contracts that are 0 days and stuff like that. If you're constantly getting burned by them, you can just stop trading them. Trade something safer. There's always something safer that you can do with your money. Like this right here. If I don't want to deal with drawdown, I don't have to accept drawdown. I can always just cut the position nice and early, maybe 2%, maybe 3%, maybe even 1%. I don't ever have to go in the red. It's a choice. So if I'm taking small, consistent compounding profits, and I'm a new trader and I panic every time I see a big red number, guess what's going to happen? I'm going to start seeing big red numbers because I allow it. So I have to stop that cycle. As soon as I see stuff going red, I can just cut it. There's no harm in that. But, over time, if you've been doing this for a while, then you can kind of allow for a little bit more magnitude in either direction. But it's really all about just being consistent and clean. If you're not doing stuff mechanically, you're going to have some inefficiency. You're going to have some noise in your data. And then that's going to muddy the water when it comes to you figuring out if your strategy is good for you and if it's workable on the stuff that you're trying to trade. If you have 5 seconds to hide in the bathroom at your work, you're going to have a bad time if you're trading slower moving day trades. And you're going to have a bad time if you're just jumping into scalps because you think that's the opportunity that it's going to give you because you happen to be looking at it. So, you just got to be careful. That's all. All right, Lobo's pulling back down a little bit. Joe P, welcome. Hello, I'm new here into trading. Been watching videos like Ross Cameron over a year. Thank you for free live trading. Very interesting. Are there halt trading strategies? Yes, there are. And that is also a great way to hurt yourself. So I want to really emphasize the importance of not chasing high volatility stuff, especially if you're just trying to figure out risk management. And we see this all the time, and it's not a character flaw at all, so don't take any offense to it. New traders are conditioned to want to chase big numbers. And the reason for that is it's a built-in part of our neuropsychology where we automatically compare ourselves. There's an implicit comparison process in our brain it's basically like identity psychology. We have an expectation that's built on memories retrieved from our hippocampus and emotional tags from the amygdala. They get sent over to the anterior cingulate cortex. There's a comparison. If the comparison doesn't match, it sends out a panic signal, and then we rely on impulse. So it might seem a little complicated, but basically just my key point here is that you're a reactive processor. You're an emotional reactive processor. And the market and the marketers that want to sell you stuff, they rely on that, right? That's all business psychology. So if people have desperation, if they have a desire, if they want to make money and they want to improve their life, which most people do, they're going to put big numbers in front of you. That's why I hate profit porn, because it sets an unrealistic expectation for most traders. And that kind of sets them down the path, right? It's kind of that first one's free, that initial bump, If you're new to the market, your focus should be on trying to preserve your capital as much as possible. It should be on minimizing your losses. And again, if we think about this logically, your losses are going to be what's going to take you out of the market. It's not going to be your wins. Like, wins can happen to anybody, but it's the losses that knock people out of the market. So when you're watching people like Ross Cameron, who I have mixed feelings about him. Like, he's a great trader, obviously, like he knows what he's doing. I like him for that, but I think that he also sets unrealistic expectations for new traders, and that kind of hurts them. So I'm not picking on him specifically, but he's a handful of the gurus out there that kind of leave a lot of damage in their wake at the end of the day. So with that said, I'm just going to keep an eye on OLMA here, because it's if that gets volume, that's got a nice setup. But if you're a new trader, there's a better way, right? And it all just boils down to your understanding of money and your understanding of yourself. So if you don't have, let me just pull this up here. You guys are going to hate me. I know everybody hates this when I pull this up, but it's important. And I have to advocate for new traders, and I have to advocate for risk management, because I see too many people hurt themselves because they just don't know what they don't know. So, the stupid things. I canceled my Miro subscription because I don't use I don't make new boards anymore. I use Photoshop and all that. So if you don't have this one right here squared away, if you're not financially secure outside the market, you are going to have a bad time inside the market. And the reason for that is because a lot of the reasons and the motivations for taking your actions and making the decisions you're making in the market are the result of trying to compensate for financial instability outside the market, or trying to make things happen, right? You're going to make things move because the market's in front of you, and it's a path to easy money and big numbers, and you really want to just turn over that money as fast as possible and make the most out of every dollar you have. So that means you're going to put every dollar you have at risk, and then it's just going to compound into self-harm, financial self-harm. So making sure you're financially secure outside the market is critical. Making sure that you have full visibility over your recurring expenses, making sure that you're taking advantage of retention programs, retention promos, loyalty rewards programs, anything you can do to reduce your monthly recurring expenses or your annual recurring expenses, because if you don't, you're just paying these companies extra money that you don't have to, because the programs exist, the promos exist. It's up to you to reach out and take advantage of them. Like, I don't want to pay Verizon all my money for no reason. I'm getting the same service, but I absolutely grabbed the military discount. I was in the Army. It makes sense. It's a discount that's established for veterans. I also call them up every now and then on the phone, and I say, hey, I really like being with you guys. I like your service, but I found a better deal somewhere else, and I don't want to leave. Do you have a promo that you can put me on? And I don't need to, but it's good practice, just to see what they have available, and then I can help, share that information with you guys. But, you're be nice to Verizon. Well, you probably get it then, right, Paul? And that's not money coming out of your pocket. It's money coming out of the CEO's pocket. Now, he's not going to take the hit, obviously. So what that's going to do is that's going to stunt R&D a little bit, and that's okay. You're a contractor. Yeah, you're fine. It just making sure that you don't pay as much as they're asking, right? Like recurring expenses and the IRS, right? Why pay more than you have to either of them? Okay. My job here is to help you get a discount for everything, right? And it's just it's an efficiency of dollars. So rather than, when you want to make consistent contributions into your portfolio, rather than dipping into like your grocery budget and eating ramen and being unhealthy, if you can squeeze out an extra $20 out of like Verizon or T-Mobile, and then maybe another 10 or 15 bucks out of your internet service provider, or maybe cut your utility bill down a little bit, or refi your auto loan, A, to improve the age of account, which helps your credit, and B, to reduce your monthly payment, which helps your money flow. Instead of eating ramen, you can just reduce these expenses that no one ever considers reducing. Doesn't mean you have to shut stuff off or adjust your quality of life. It just means you got to spend 10 minutes on a phone once in a while and ask for a loyalty promo or retention promo, right? So that's step one. Building good credit is obviously another critical piece of this, because if you want to maintain debt, and anyone who's a homeowner, anyone that takes out an auto loan for a car, you guys maintain debt and you pay to do it. That's the interest rate. So the better your credit, the lower the interest rates, the better off you're going to be. There's also a really big misconception that it costs money to build and maintain credit. It does not. That's a lie. You want to use as little credit as possible, but you want to have as much access to credit as possible. So that's a whole separate discussion. And I'm trying to rush through this a little bit because I know everyone gets bored when I do these. But this is the most critical piece. If you want to do well in the market, you have to do okay out of the market. So even if you're not able to balance your budget and meet all your ends, if you're in kind of dire straits there financially, at least having visibility of your expenses can help. Okay. And if you ever have questions about that stuff, feel free to reach out. I do this stuff all the time. But we want to make sure that we're to a point where we can make consistent contributions, because if you make consistent contributions into a portfolio, there's a constant inflow of opportunity, and we want to then temper that opportunity so that we're not losing more than we're contributing. So if you put in $20, you don't want to lose 30, right? That's all it boils down to. So you take percentages of that 20 and you risk percentages of it. That way you make sure that you don't ever lose $20 plus, right? And then with that simple process, your portfolio value should increase over time organically, because you're depositing money and you're losing less. It's a glorified savings account at that point that you just keep taking money out of to spend on other stuff at that point. It's like an Amazon gift card. It's just a reloadable gift card in just that context, if you're not able to speculate well and you just keep taking losses, right? That kind of makes sense. But we don't want to lose a bunch, okay? So rather than just speculating, we can take those consistent contributions and break them up into two pieces. And we can put maybe the bulk of it, maybe 70, 80%, or 100% if you're still figuring out the speculation part, and just put it into investments, dividend positions, passive option strategies, the wheel. There's all kinds of different ways that you can make money while working less for that money. And then you can put the rest of it into speculation if and only if you can prove to yourself that you can be net profitable. So, if you're taking drawdown, for example, the frequency has to outperform on the win side. So in this case, if I took a loss right here, let's just say that I put 254.46 right here, that's a 9.24% deficit. So I need to make this 5.56% for the week. And that's okay. I can still achieve that because I have 3 days left in the week. Just like here, I had extra for the week. So I made sure that I capped that loss to a certain amount so that I didn't go net negative for the week. And that's all I've been doing. I don't avoid the losses. I just manage them as well as I can. All right. So when you're dealing with speculation, you need a portfolio structuring plan as well as a position sizing plan. Are you going to place one buy, or are you going to place 3 buys? Are you going to sell everything at once, or are you going to sell the bulk of it at like a small percentage and let the rest run and do multiple sells? That's before you even look at a chart. You don't need to have a technical analysis strategy for that part. That's just position management, right? Then you want to build some sort of technical analysis strategy which prioritizes risk management and ideal outcomes across this matrix of potential end results. So in this case, if you had $20 and you had a 1% risk and a 2% profit, you'd get 6 possible outcomes, a 7th if you don't trade at all, right? You'd either have a net $2 profit for the day, a net $1.40, a net 80 cents, a net 20 cents, a net negative 40, or a net negative $1. So 2% of $20, 1% of $20, right? And then most of these outcomes are net positive, and a third of them are net negative. So then you reinvest the profits and the losses go towards tax advantages. And then towards the end of the year, you just stop trading those. And then the wash sales get released. You get all those back in forms of offsetting your capital gains. up to an amount. Obviously, it's a net sum thing. It's a very complicated process, but yeah, that's for another time. And then those reinvestments count as additional contributions. If you think about it, it's just another set of dollars that's going into the portfolio that you didn't have to go out and work in the workforce for, right? You're just letting things passively compound. You're letting those dividend payouts roll in and you're reinvesting those. And you're also taking your speculative profits and trimming the account down so everything stays in a nice familiar territory. And that's 3 or 4 streams of revenue, because also when you get your taxes back, your deductions, they're not credits. They offset your tax burden. They lower your tax bracket as much as possible. And then that, in theory, works with your credits, your actual credits, like your earned income credit and all that good stuff, childcare credits and stuff like that. And then that improves your tax return dollar amount, which you can also contribute some of that into your portfolio. So now you've got 4 streams of money going into this portfolio. Whereas when you were just putting one, maybe a monthly payment into the portfolio, you just had that one stream of input, right? So you've taken one source of dollars and you've turned it into 4. Does that make sense? So you're just like laundering money to yourself, effectively. You're just running it through one of 3 machines. It's either going to be an investment machine with passive income, or it's going to be a speculative machine with predetermined outcomes, which should yield a net positive result, or you're going to take those losses, the slag effectively from this, and then you're going to put it into taxes and get that back and then contribute that into your portfolio. So that's the idea. You're turning $1 into multiple forms of that same dollar. Okay. And of course, doing that is the hard part, right? Because we can't accept small losses. We can't accept small profits, and we just let things go out of control. And then we let the market take a bigger position, a bigger role in our life. And then we start being less secure outside the market because we're just trying to make money, right? We're trying to speed things up. And it's very easy if you're in the room to just let you and the market be in the room, and you become a slave to the charts. So that's why I say, and that's why I really emphasize, I don't like looking at charts. I don't spend hours every day doing this. I do it on live streams because I want you guys to have access to the information and the insight, but I'm not, like on a Wednesday when I don't stream, I'm in and out within a matter of seconds most of the time. I just come in here and I pop in here and I hit like my Control 9 hotkey. It sets a take profit automatically and I'm out. That's it. So, I'm not sitting here for 4 hours a day staring at charts, looking for setups and constantly, well, what if it goes up here? I don't care. You develop a distaste for it after a while, because I'm not getting paid more to do that. I have a finite number of dollars that I can trade with every day. I just have to protect them and then make the most out of them while they're there. And I know I'm going to get the best opportunities when things are moving, like CGTL, for example. I'm looking at these percentages. I look at very little information because I don't want to make the process complicated. Because once you make it complicated, you get your identity attached to it because you have to be right? Because you're putting in more effort. You want more compensation for that effort and focus. And that's where we jack ourselves up. So don't do that to yourself. It's very easy for me to say that, but it's not hard to do. So, or not easy to do. So if you find yourself staring at charts too much, you're going to have a hard time. It does turn into a form of addiction, and it's very difficult to break it because it's deeply rooted, right? Your identity is the one thing that makes you you. At the end of the day, it's a huge part of like your prefrontal cortex and other parts of the brain that evolved and have been conditioned over the course of your lifetime to do certain things. So you have a healthy functioning brain, but the market is exploiting that because it's meant to do so. So, you have to let go and not focus on being right more than you're wrong. You just have to be wrong better. That's all. That's all it is. You don't lose less frequently. You just lose less. And then allow the profits to happen to you and all the other stuff that I lecture the lifetime members about all the time. And then you'll be in a better position. Joe P, you mentioned your goal is $4 today. Why that number? So in this spreadsheet here, this sheet specifically, it is just a daily goal. It's a 1.5% daily goal based on the number of dollars that I start with for the day. So in this case, I might be taking a hit. If it doesn't come back, if it doesn't get the volume back in, I'll just take the hit, and that's okay because I can always offset it. I can always make that money back pretty easily. But most days we just get our 1 to whatever percent that we end up with. Like yesterday or Friday. No, yesterday, sorry, we got 3.68%. So that's 3.68 days worth of 1% profits. But the daily goal I recently adjusted, I think it was on the 10th. I think I adjusted this up to 1.5%. I think I was going to wait for the 24th to start scaling out of profits, but I just want to jump the gun a little bit. So, sorry. But that's the plan. So we'll see where stuff goes. And I always update. I always do this transparently. You guys can see that I do take losses, and when I do, sometimes they're larger because I allow drawdown. And that is a choice. Again, you don't have to ever allow drawdown if you don't want to. I do, and I share it, right? And that's something I don't see out there on the internet. I see all these gurus sharing big profits, but they're not showing everything, right? So you guys can see it is perfectly it's possible for me to take larger losses and still be net profitable, but I don't have to, right? Where would this account be if I didn't take this $14.34 loss? Maybe it was a $2 loss, right? I'd have an extra 12 bucks in here. I'd be up $62 net positive since October 27th. If today, for example, I didn't have a $26 drawdown, I'm still up. I'm still up by about 25, 30 bucks, but I don't have to, right? I wouldn't have to take the drawdown if I don't want to. But the one key thing here is that I'm not hiding these. I don't, pretend the losses don't happen and then, add money into the account to make up for it and post stuff on social media. I'll show you guys everything. That way you can see the good and the bad. And I can point out things that you don't have to tolerate in your trading that I do in mine, so that you can have a better outcome. And that's, if I could go back in time as a new trader and, kind of fix or build a more solid system early on, I'd be way ahead where I'm at now. Like, this isn't my account, obviously. This is just a super tiny, little chunk of change there. I like these small accounts because it keeps things relatable for most traders. But there's if you're trading a bigger account, you're not going to be speculating low flow trash like this. It's going to be more stable setups. You're going to hedge positions with, protective options and things like that. So there's a completely different set of rules once you scale it up. The percent is what matters. 1% every day, all year is quite a bit. Yeah. And that's, again, that's, I think, what was the plan here? I think it was to, I think like a year from now, right? What's today? November 18th. Oops. I gotta go to this tab. November 18th, 2025. Let's go to November 18th, 2026. Right. So we should be about 44K. So not a small amount of money for most people, especially if you're starting off with a $250 kind of starting point, right? And then a year from then, November 18th, 2027. Now, obviously, things are going to change once you get up to this level, but you're not going to be up in the millions at that point because you're going to have some inefficiencies. You're not going to get 1.5% every single day. And we're going to have, we can still achieve it, but it's going to be a lot more difficult to get there at that rate. So, you're looking at $2.1 million. Even if you don't hit that, I'm not going to be sad, right, off that money. But again, that assumes perfect execution, 1.5% minimum per day. And then also that you won't run into things like liquidity ceilings or things like that, which we absolutely will, and we'll adapt. And I'll show you guys how to work around those. But for right now, we got plenty of runway with this small account. By New Year's, we should be around $1,000, 947. So not too terrible. But we'll get there. I also want to show the realism, right? So you're starting with $20 this week. Good stuff. It doesn't take a lot of money to start. I don't want anyone to believe that they need a bunch of money to start. And that's one thing that I always hear when I talk about dividends and putting, consistent contributions into investments, is that people believe they lie to themselves and say, oh, I'm going to speculate up to a certain amount and then I'll invest. It's that's backwards, in my opinion, right? You're not protecting your money at that point. You're trying to optimize your money before you have the skill set. And then you're just kind of burning through that capital, which could otherwise be protected in those longer term investments and providing at least some compounding return that you're probably not going to get on the speculative side while you're trying to figure this out aggressively. So you got to be careful. And it's an identity thing. We believe we can do things that we can't yet. It doesn't mean we can't in total. It just means that until you've got that data in hand and say, yes, I can absolutely grow this dollar amount into this dollar amount. If you're just kind of wanting it, you're not going to be able to succeed and at the rate you're expecting. BebNet, boom, got my 1% account ROI in 30 seconds, done for the day. That is beautiful. I love it. That's music to my ears. Hell yeah. You committed 30 seconds of work today, dude. Beautiful. Joe P, what do you guess is the realistic outcome for 2 years from now, including the losses? Is that on this account? Starting with this 250 and the same process? Yeah, okay. So in that case, I could easily see 6 figures. 2 years is a very long time. I'd say like mid to upper 6 figures. Just knowing my own skill set, and like I'm not gonna be aggressively flipping this account. Like you guys watch me turn $50 into like 2,000, and then on Kalshi even completely different market, same mechanics. I turned 100 or whatever into 3,000. Not too long ago. It was a couple of weeks ago. So I know I can trick these accounts out and stuff, but the goal here is to demonstrate consistency. Kalshi, that was over a weekend. I started on a Friday at 4:30. And by that night, I think it was like 4 hours or something, I flipped it up to 3K. And then I just reduced it. I withdrew a bunch just to bring it back down. And then I flipped that 100, I think, into another like 1,200 on Saturday. And then I traded it a couple more times, and I just kind of backed off of it. It was just taking time. I can't watch the games anyway. And I'm not going to focus too much for a couple hundred or a couple grand here and there. Like it's just not worth it. But yeah, so within 2 years, I can very easily see, and I've walked through the specific phases of this. I could see the mid to upper 6 figures pretty easily. And again, it's a perception thing, right? So if I look here and I say, if I just look forward, and I'm not used to using bigger accounts or anything like that, and I say, okay, my daily goal is $5,200. Okay. A trader with a small account that's new to the market is going to absolutely freak out. They're like, there's no way I'm going to make $5,200. They're going to compare that to the number they have in their account today, which in this case, if it's $253, they're going to just lose all confidence, or they're going to get, pie in the sky, starry eyed, euphoric and take big risks because their risk perception gets skewed. But if you've got $350,000 in the portfolio, making $5,200 in one day is pretty achievable. That's 1.5%. It's the same 1.5% as $3.63 was when we had $242 to make that with, or $3.69 was when we had an extra $4, right? So we're just compounding this 1.5% over and over. This is 1%, by the way. But today, for example, $4.21, relatively easy, but I didn't get filled. So I'm comfortable with the drawdown. I'm comfortable with the chart. I like it. Just waiting for it to get some more volume and pop back into the upside. And if it doesn't, or if it pops to the downside, I'll just take the hit because, again, I can absorb it. It's not something I have to stress out over. OLMA, it's just slowly going range to range, which, when the volume is low, these act as magnets. That's why I draw them the way I draw them. And then when the volume comes in and they pop, that's when I look to sell. So we'll see where things go. There's a nice, beautiful fib retracement on this one. Crappy volume, though. It's just spot volume. So this is not a safe trade. But that's the goal. I'm just compounding 1.5% now. It was 1%. Like BebNet, just slamming that 1%. Great. 30 seconds of work. You put the market back in the box. You set the box on the floor next to your desk and you move on. That's great. This is your side hustle. What time frame was that on Kalshi? Oh, I think you already asked that. Yeah, it was just it was on the weekend. There were some games going on, which again, I honestly I don't even know much about the sports that I was trading. Like, was it the I think it was like men's tennis or something. I was just like, I don't know. I don't know crap about crap. So I was reaching out to like one of the lifetime members, Onrod. He's a sports guy. We were kind of chatting. I was joking around with him and Matster and Duck about like, just, I don't need to know about the sport. I know about the market mechanics, and that's all I need. I enjoy certain games, but I hate soccer. It's just not something I've ever been interested in. Baseball, same way. Golf, I just never had an interest in them, but I made money on them just because of how liquidity works and how supply and demand work. And a lot of it was position size management and, buying and selling and accepting profits and repeatable, scalable systems. That's high gains on Kalshi. Is it because there's a lot of volume from people not looking at real world stats? No, a lot of it is people that are diehard sports enthusiasts, and they have very strong convictions in their teams and in their players. And then when, that expectation is met with the other team scoring points, that introduces volatility. So I just exploited the volatility there. That's all it was. I saw one, will Trump sign an executive order this week? And he already did, but the yes is at 98%. So if you put 50K right now, you get 2% gain in a day or two, right? Yeah, so Kalshi is going to be its own little segment. The pro of trading the higher probability stuff, the stuff that's in the higher percentages, the likelihood of you winning is higher. But I'm trying to think of the best way to explain this. If you're wrong, like I saw a basketball game, it was 98% and 2%, and the other team shot a 3-pointer and sunk it right at the buzzer. And yeah, everybody who bet and had their money at 98% thinking they were going to win lost everything. It's 100% loss, and it's always less than 100% profit. You can't win 100% unless you go below 50%, right? So if you buy something above 50%, your probability is higher, but your profit potential is smaller. And there's a way that we can trade that very mechanically. And I kind of walked the lifers through it, but it's risky. You kind of have to just, yeah, exactly. You just kind of have to scalp that liquidity while it's there. Unless you just want to gamble, if you want a sports bet, you certainly could, but just understand that in that case, you're going to want to get in below 50% if it's an ideal team that you want to win. If it's a sports thing, it could be anything. You can bet on all kinds of stuff there. There's stuff about will it rain in New York City, on that day, so there's all kinds of stuff. But understand, just like binary options, you either win a smaller amount or you lose a larger amount because your max risk is always 100%. Doesn't matter if you buy at 1% or 99%. If you lose everything you put in. That's why it's important to focus more on scaling your position and accepting those profits and reducing position size when it's appropriate. Yeah, it's interesting, but in that Trump executive order case, the White House site already announced the executive order before the Kalshi closed. Yeah, exactly. Kalshi waits for a different website for official posting. Yeah, they have their own verification sources, and you'll see that a lot of times with games too. The game itself will end, and then they'll update the score. It'll say final, and then depending on the game and the source and the sport specifically, it can take a while before the actual contract settles and you get paid. That's why it's always faster to sell at like 98 or 99%, just because you get your money back faster. Now, sometimes there's a fee, so you got to consider that as well. But just the convenience of having your money available, if you're aggressively scalping like I was, that has advantages, because I don't want to wait a couple hours for a site to verify, because that's other games I could be trading. So, but again, Kalshi is going to be its own separate topic. I don't want anyone to jump into that face first, because again, your max risk is 100%, so it's very risky. In the market, like if you had this position here on CMND and I just decided to sell it, my max loss is going to be 30%. The only time I lose 100% in the option in the stock market is if I'm trading options and something expires, or if something delists and I can't sell it OTC. So those are things I can kind of control a little bit. I don't have to trade options, and I don't have to hold things to delist or trade things that I know are at high risk for delist. So I have a little more control there over my losses, and that's the real advantage. You have to be a professional manager of risk. So just be careful. That's all. No matter what you're trading. We always make a joke that like you can pretty much go anywhere in any market and make some sort of profit, right? It's a system and it's a mindset. So once you have the mindset, you can identify the system and exploit it for a profit. And that's why I like trading these small accounts, because you don't need. I could take all these concepts and slap them into random stuff. And I do this little parlor trick every now and then where I ask you guys for a ticker, I ask you guys for a date, I ask you guys for a time frame or a price point specifically. Not so much a time frame. I like to choose that on my own. And then I'll call out a strategy ahead of time, and we'll trade it, with back test, and we'll usually end up with a net positive result over some set of trades. And it just, it blows people's minds, but it's because we're using something mechanical. It's not because it's a perfect strategy. It's just because we're using consistent execution and we're managing risk. So with that said, though, I do have to jump off here pretty soon. Does anybody have any questions before I do that? I'm going to end the live streams on social media, and then I'll hang out here in the Discord with you guys while I'm wrapping that up.